Hey guys, it's Bromos, and today we'll be going over OESX as a possible play for this week. On the daily, we can see that it's been moving down for a few days. Some of you might be thinking, why is Bromos interested in this stock? Didn't he just say in his last video that he only likes upward trend stocks? I see three bearish candlestick patterns, so what's going on, Bromos? Well, you have to understand that you need to look at the whole story that leads up to it, and not just parts of it. Let me take you through the story. We can see it was at a steady uptrend last year in November and broke out the symmetric triangle with a 55% move. That's pretty big if you ask me. Once it made the move, it made a pullback to the 20 SMA line and on a strong level of support. Note that it also closed with a bullish candlestick pattern known as the Harami, which is not as strong as the bullish engulfing, but still indicates a possible reversal for the bulls. It broke out of the bull flag and made a 35% move before pulling back to support again, but this time closed with a doji. A doji indicates indecision in the market between the buyers and the seller, and usually signifies a sign of a reversal for the bulls in a downtrend. Now it broke out of the second bull flag and made a huge move before pulling back to that very same support that the previous bull flag pulled back to. Not only is it bouncing off the 20 SMA line, but it's also the third bounce off this level of support. Let's take this idea of three bounces one step further. Not only do we have three bounces off that support, but also on the rising pennant, which also shows that the overall trend on the daily is upwards. Having multiple indicators on support, in my opinion, is a very strong sign that the bulls are still very interested. Some levels of support to consider are $5.23, which is also on the 20 SMA line, and $5, which is psychological. Some levels of resistance to consider are $6, $6.25, and $6.30. If we were just going off the daily, you could risk around up to 5% for a chance at 15, 20, or 25% gains. This type of risk reward is pretty good compared to the other ones I've seen where I've had to risk a higher amount. On the weekly, it broke out the rising wedge but didn't really go too far and is back at the previous resistance, which is now support. We can see that the resistance and support levels are not that much different from the daily. Looks like the price target on the weekly matches up with the daily. But let's see what the monthly chart has to say. The monthly has a nasty inverted hammer candlestick pattern. The reason I call it nasty is because the top wick indicates that buyers were pushing this higher at one point, but then the bears managed to bring it back down. Regardless, it's still holding a level of support while being at an uptrend. Remember what I said earlier, we have to look at the whole story and not just parts of it. It would be too hasty to assume that this was bearish just because of one candlestick, one indicator. Also note that there is still time for the candlestick to recover. If we were to use the monthly to calculate our price targets, then I would say we could hit $6.50 or $7.50. I would rather aim for the $6.50 and move on. But if anything, if you decide to take this play and it hits $6.50, then you could scale some along the way and just ride the rest. Just don't forget to move your stop loss up to the next level of support so you can preserve your capital. I should also mention that this is not going to be a quick play, so only take this play if you have the patience for it. The main reason why I'm interested in this is because it's on several support levels for each of the time frames and has a low risk, high reward. My plan is, if I can see this holding support, then I will enter and have my stop loss at around $5 and see if we can hit that $6.50 mark. In other words, I'll be risking 5% for a chance of 25%. Hope you guys enjoyed this video. If you guys have any questions or comments, feel free to let me know. Have a good day.